What is Terra, Luna, and UST, and how does it work? Terra has devised a novel method of minting decentralized stablecoins linked to multiple fiat currencies. Terra's US dollar stable currency, UST, has had its circulating supply double in the last month, making it one of the largest stable currencies by market cap. Terra has been developing new protocols as well as collaborating with existing ones that employ the UST stablecoin for borrowing, lending, staking, and even synthetic stock trading. As a result, Terra's native Luna coin has been climbing the ranks. Let's take a closer look at Terra. What is Terra? Terra is decentralized financial blockchain that is developing a simple yet strong global payment network. Terra was founded in 2018 by Terraform Labs. Stablecoins, according to Do Kwon, Terra's CEO and a South Korean software developer, are crucial in establishing such a system. Terra's ultimate objective is to use stablecoin cryptocurrencies and decentralized finance technology to challenge traditional banking. Terra-powered CHAI, a payment app used by 25 million South Koreans, has already made significant progress in this area. In Terra's vision, people will purchase and sell items in the future, using digital currency stored in blockchain-based mobile phone wallets, multi-fiat stablecoins that are automatically exchanged behind the scenes and on-chain will be accepted by merchants. And, similar to how you could rent out empty condo space on Airbnb, you'll earn interest on unused cash by storing it in Terra DeFi apps. Even more enticing, Terra believes it can lower merchant transaction fees to 0.5% or less, attracting additional partners. As a result, more individuals will use Terra, fueling the platform's development and allowing it to offer consumers discounts on their purchases. Terra has two important components to construct this future. How does it work? The Terra ambition is to popularise cryptocurrency payments and to build a huge payment ecosystem that integrates banks, credit networks, and payment gateways into a single, open system. Terra thinks that stablecoins are the key to completing this mission since they can do two things: keep your purchasing power and make it possible to make easy, low-cost payments. Due to the global nature of cryptocurrency, preserving purchase power implies various things to different people and economies. For some, the US dollar is exclusively unpredictable, while for others, it is a haven. This is why the present dominance of stablecoins like USDT and USDC is unsatisfactory. As a result, Terra devised a system for issuing regional stablecoins that can be readily exchanged. Dollar-tied stablecoins such as USDT and USDC are not only pegged to the dollar but also backed by dollars. For every one USDT issued, a reserve of $1 is maintained in reserve. Terra stablecoins are not backed by dollars, Korean won, or any other fiat currency for that matter. Terra, on the other hand, creates crypto-collateralized algorithmic stablecoins. These stablecoins have a fixed value thanks to a circular dual token structure that allows for seigniorage arbitrage. The gap between the cost of issuing an asset and its face value is known as seigniorage. If a $1 bill costs the US government 50 cents to create, the difference of 95 cents is profit. However, as Do Kwon explains, seigniorage is defined as seigniorage, new minted currency plus cost of acquiring collateral for a stablecoin asset. For Terra, every time a stablecoin is algorithmically issued due to demand, the platform profits. It places those profits in the Terra seigniorage pool to fund projects in the Terra ecosystem and reward Terra users. But how do Terra stablecoins maintain their stability? Terra, as previously said, captures value and stabilizes prices through the interaction of two tokens. Luna is the platform token that backs up and stabilizes the Terra stablecoin price. The Terra SDR asset is a basket of currencies that are backed by Luna tokens. The price of the IMF SDR, a special asset made up of a weighted basket of currencies, is tied to the price of Terra SDR via banned oracles: USD, EUR, YEN, GBP, RMB. The SDR creates a non-volatile reference point for Terra SDR since it is made up of internationally relevant currencies. You can submit 1 Terra SDR to Terra's smart contract to obtain 1 SDR worth of Luna when the price of 1 Terra SDR equals 0.95 SDR. Terra SDR's supply is reduced, bringing its value back to parity with SDR. In the event where 1 Terra SDR equals 1.1 SDR, you can transfer 1 SDR to Terra's smart contract in exchange for 1.1 Terra SDR. This boosts Terra SDR supply, lowering its value to parity with SDR. Terra can keep stablecoin prices fixed to the Oracle Fed values of fiat currencies without physically holding such assets in reserve by growing and shrinking the pool of money. How to use Terra: collateralize and stabilize Terra stablecoins, stake and govern the Terra blockchain, fees and rewards from Terra transactions. Another benefit of keeping and staking Luna tokens is that it allows you to get a secret advantage. The advantage comes in the form of airdrops. Luna stakeholders receive free airdrops in proportion of their investment when new applications and tokens appear in the Terra ecosystem. Aside from the sheer value derived by arbitraging stablecoins and fees paid to Terra stakers, having Luna for governance is an undervalued benefit. Terra is a DeFi platform, which means that all decisions are decided by the Luna stakeholder community. How the cash accumulated by the communal pool via CHAI will be used is one of the community's decisions. Terra has gathered 24 million Luna by the end of Q1 2021, which is about $391 million today. Half of that money was used to pay Oracle rewards, with the other half going to the communal pool. The Terra community determines how the vast sums of Luna will be spent. Burning them might make Luna more scarce and raise costs. However, the Terra ecosystem has so far been reinvested by the community to encourage adoption and long-term goals. Is Terra a good investment? Holding Luna and participating in the Terra ecosystem rewards community members, precisely as the Terra white paper promised. As a result, Terra is rapidly expanding in terms of both community and acceptance. Several flagship apps have been released to support the Terra ecosystem and provide DeFi capabilities for trading, spending, and storing money to Terra users. Mirror Protocol, a synthetic asset exchange, and Anchor, a crypto saving account with high returns of 20% on UST deposits, are 2 of them. Terra has a real non-zero possibility of becoming widely adopted in South Korea and elsewhere. It too has a chance to reach the top of the rankings thanks to DeFi programs like Anchor. So being ahead of the curve might be a worthwhile investment. How do I buy Terra Luna? To get started investing, you need to open an account with a crypto brokerage that supports Luna. The most prominent cryptocurrency exchanges that support Terra in the US are Voyager and Gemini. If you're buying Luna as a long-term investment, you'll want to keep it safe by putting the private key in a wallet. Then it's time to exchange some USD into Luna. Simply go to your exchange's Terra Luna page and make your acquisition. Should I buy Terra Luna? I must first issue a disclaimer before answering this question. This is not financial advice because I am not a financial consultant. This is my own opinion, not financial advice. Before investing in any of the various cryptocurrencies available, please conduct your research and due diligence. This is created to help you easily understand the topic with our animated explanations. When we talk about cryptocurrencies, we frequently discuss how they may solve a problem or what the technology might be capable of if certain barriers are removed. It's already functioning in Terra's situation. Terra has a lot going for it, with an experienced leadership team, a clear white paper, and many major investments. It can also connect with other blockchains and function as a self-contained programmable ecosystem, which is likely why Luna's price has increased by over 2,000% since the beginning of the year. According to a study by RBF Capital, Terra's stablecoins may have a 20% market share by 2025. This year, Luna has done quite well, and it appears that it will continue to do so in the future. However, all cryptocurrencies are dangerous, and the future of stablecoins is now clouded by uncertainty. Before you invest, be sure you understand how that situation could play out. Only invest in Terra if you feel it will outperform the market in the coming years or decades. Investing isn't a get-rich-quick scheme, so stay away from popular assets that promise big returns in the short term. Nobody knows if Terra will succeed, but if you have trust in its long-term potential, be prepared to ride through the waves of volatility with your investments. Bitcoin's value has dropped by more than 80% in the past year, and Ethereum's value has dropped by almost 95% on occasion. Terra, or cryptocurrency in general, may not be the best investment for you if you're not okay with short-term volatility. Will Terra become a widespread and mainstream form of currency in the future? Nobody can be certain. It has its benefits, but it remains very speculative at this time. It might be a good long-term investment if you believe in its potential. Otherwise, there are a plethora of other alternative investment opportunities available.